if there is a real estate collapse, if there's anything that has collapsed right now, it's transactions. Like we're at a 20-year low in transactions.
Which is hurting a lot of people. I mean, there's you got lenders, whether it be hard money lenders or, long-term 30-year mortgages. I mean, I talk to Clint every day. And, he's like, hey, we're in a rough time. We see it maybe clearing up second quarter 2025, 2024. Sorry. But right now, people have they're uneasy. The consumer confidence is really not there as far as your end buyer. And I mean, we've had to tell our investors, like, look, if this is going to be a buy and hold or buy and sell, you got to understand, you're going to have longer hold times, and you have to mitigate those circumstances up front on the deal. You can't be buying things, at max 65% of ARV and, think that you're going to get 100% financing. And
it changed the investor game. Like I remember, so Eddie was talking for years before I even caught on in my head that the game was changing to a landlord market.
Yes.
And you saw hard money lenders like Jet, that you really positioned some really strong and unique products to cater towards landlords. And then when I'm out there house flipping, I'm realizing like I'm just getting beat left and right by landlords that are willing to pay a lot more because financially it made sense. They were able to get the loan product to help it cash flow with very minimum and oftentimes no money down. So that made sense. Right now it's a little different. I'm actually seeing wholesaling's always been there. It's just they're having to change who they're wholesaling to. It makes more sense to wholesale to the house flipper because the house flipper is going to get a decent discount, flip it, put it back in the market, make a quick buck. Whereas if your strategy is still long-term holds, you either need to buy it cheaper or you're going to have more money stuck in the deal. Or the third option, which in my opinion is the best if you can make it work, creative financing. Getting either subject to or some type of owner's financing that where you have greater control over the terms.
Yes. A lot of owner financing deals that have popped up. We're even offering it a little bit on some stuff that we're trying to offload as far as inventory, just to try to get some more capital and stuff like that. I mean, at the end of the day, you got to, as a smart business person or a smart real estate investor, you've got to be able to pivot with any market. And I think that's where a lot of investors mess up is they don't pivot early enough.
Yeah. I made that mistake. Like I should have transitioned more to the buy and hold, and I've talked about this in the other shows. But ultimately we were focused on house flipping and we didn't quite position ourselves in the buy and hold quick enough. I'm still all in on buy and hold. It's just I'm not necessarily like single family is a little harder. Multifamily, you got a little bit more flexibility in how we can make that work. But even on the multifamily side, it's changed that game. We're having to bring in private equity companies as opposed to doing an all-out raise from LPs or equity investors.
Yeah, well, a lot of people don't realize also, as far as active versus pendings in an area, that will hurt your sale. You've got to be competitive as far as your ARV, and a lot of investors right now are still looking at what they can max sell that property for. And we're having to educate a lot of people, say, hey, no, you got to pump the brakes. So yeah, you've got 4 comps, right, that are selling at, I don't know, let's say 650, right? They're selling at a 650 mark, but most of your comps are in the 600 to 590 range. And then you got a whole bunch down here that are really moving at 525. Where do you think your and we're talking about all similar square footage. Where do you think your movement is? And to be competitive, and for any lender, they're going to look at what's moving quickest, especially on the hard money side, because we don't want the inventory sitting there forever. We don't have a crystal ball, and nobody does either, that says, hey, 6-7 months from now, when you're done with that rehab, interest rates are going to come down, because we don't know. So we've got, and I told somebody this, you've got to underwrite it, not based off what the future is going to do, where you're at right now, because the crystal ball is not out there for anybody. Nobody predicted that we would get 7.25, 7.5 interest rates 3 years ago. No,
risk mitigate in worst case scenarios that you don't get that price.
Yeah.
And that could be refi out long term. You're going to rent it out, which what does that look like? Are you negative cash flow? Can you support that? Are you going to put an extra 50 grand down just to make it work? Or do you have the margin to where, man, you could sell it at 485, but you'd break even, but at least you can get it off your books. Like, what does that look like? Versus you need 620. And if you get anything less than that, you quickly go negative. Like, maybe you should either renegotiate the terms or pass on the deal.
Yeah. Yeah.